Hey guys, I wanted to give you a quick overview on some of the benefits of being able to run multiple investment offerings all at the same time. What I really mean by that is there's different private investment exemptions. You don't have to go register it with the SEC, but there are certain things that you're not allowed to do based on which rules you're working with. So I'm going to go over real quick about what those rules are, but then really dive in deep about the benefits of being able to do multiple investment offerings all at once. Now, I do got to say, hey, maybe we're an attorney, maybe we aren't. We'd love to work with you in the future, but all of this information is educational. Everybody's situation is different, so make sure that you're always working with a competent, experienced securities attorney. So now to start with, I'm just going to touch on, not going to dive deep into the various securities regulations. Definitely subscribe, check out our videos on Crowdfunding Lawyers channel. Much deeper dive into the rules, the regulations. But for right now, I'm going to assume that you actually know a lot. So just burning through it, we're focusing on, as crowdfunding lawyers, the different types of securities exemptions that allow you to advertise. What these include are Regulation D, Rule 506C, Regulation CF, we call that Regulation Crowdfunding, and Regulation A. On the other side, there is a big regulation. Actually, 75% of these private investment deals are all under this Regulation D, Rule 506B. But advertising is not allowed at all. And what I mean by advertising, general solicitation, posting the investment information on Facebook, doing webinars, doing email blasts, not allowed if you're doing this Regulation D, 506B. Is allowed if you're doing Regulation D, Rule 506C, Regulation CF, or Regulation A. Just really want to hammer that home. I'm going to touch quickly on what the regulations are. Reg D, Rule 506B, we call that the friends and family round. You can accept up to 35 sophisticated, non-accredited investors and an unlimited number of accredited investors, as long as you're not advertising and you have a prior relationship. Accredited investors, just to make it super simple, they're high net worth individuals. They have a net worth of $1 million or more, not including their residence, because everybody in California would be accredited if they counted your home. Or they're making $200,000 per year themselves, $300,000 with their spouse. Really important thing to know about. But with this Reg D, Rule 506B, the biggest limitation is you're not allowed to advertise anywhere. No social media, no newsletters, etc. Now, I did mention the flip side, this Regulation D, Rule 506C. You are allowed to advertise, post on Facebook, YouTube. You can do pay-per-click. You can have in your newsletters, email blasts. You can have it in your webinars, your seminars. Doesn't really matter. These are all examples of general solicitation and advertising that you're allowed to do as long as it's a Reg D 506C. The real requirement and limitations there is every single investor has to be verified as accredited investors, 100%. Really, most of these verifications come from an opinion from either your attorney, your CPA, or your financial advisor. But I can tell you 90% of the time, it's an opinion from your CPA. This is nice and easy. I can tell you about 20%, give or take, of all of the deals in America are these Regulation D, Rule 506Cs. It's a great, fast, and easy way to get your deal on the table quickly. Now there is this Regulation CF, Regulation Crowdfunding, that allows you to raise up to $5 million from anybody as long as they're 18 years old. That is an unlimited number of non-accredited investors, an unlimited number of accredited investors. I will really point out, and there's other videos that we have that does a deeper dive into this, but with Regulation CF, there are limitations on how much non-accredited investors can invest. So make sure that you know and understand what those are. They generally end up being smaller investors. That also makes things a little bit easier because of the fact that they don't invest as much. They're not as afraid or concerned, such as if they invested into those friends and family rounds, but are contributing a massive amount of their net worth of 50,000, 100,000. Those guys are scared if something goes wrong. Doesn't really apply if they're putting in 5,000, 10,000, 20,000. So there's some benefits of doing a Reg CF. Again, make sure you're talking with competent counsel. But we're really here to talk about the benefits of combining and doing multiple investment offerings all simultaneously. And there's a couple of really major examples of when this can take place. To begin with, we have this rule, Regulation D. It used to only be one rule, basically this 506B, the friends and family, that was the whole thing until crowdfunding became a thing back in 2012. You still couldn't run both simultaneously. Rules changed way more recently. You're allowed to test the waters. That means that you're putting your investment out to potential investors before you've even picked out which regulation you're going to do this under. But you can now have these simultaneous offerings, meaning that you can run a Regulation D 506B, the friends and family round, at the exact same time as a Regulation D Rule 506C. There is a massive warning, watch out here. The rules for each don't change. You are obligated to meet the exemptions and requirements of both. What that means on the friends and family round, the Reg D 506B, is that you have a prior relationship before the general solicitation, advertising, testing the waters ever took place. You knew these people before you ever started talking about this investment. Unbelievably important, and because it really is a higher risk situation, because you have to be able to prove that you had this prior relationship. And if you don't have the prior relationship, again, don't really worry about it. You just have to accept them through the Regulation D Rule 506C investment offering. There's different documentation that comes together. There's elections of this type of offering versus that type of offering. There's different disclosure requirements. As always, make sure you're working with competent, knowledgeable, experienced legal counsel, especially when you're dealing with any sort of investment. Just reach out anytime. Contact information is below. We'd love to talk to you. And what I'm bringing up, 100% legal, but the cost of doing things wrong can be enormous. But that's one example of you can have these simultaneous offerings, your friends and family round, going along with your general solicitation, your advertising with accredited only. One really amazing way to do things. But let's talk about a second. And I am so super excited about the combination of a Reg D 506C along with a Regulation CF. Both of these exemptions allow for the advertising absolutely everywhere. There are more limitations on what kind of advertising you can put out there, primarily because regulation crowdfunding is required to go on a FINRA registered crowdfunding portal. Again, subscribe, check out our other videos. We go much deeper into those requirements and the process there. But the advertising rules of regulation crowdfunding will apply across the board to all of the advertising that you do for your investment. That being said, it changes the dynamic. Now, all of a sudden, you can accept up to $5 million from non-accredited investors, unlimited amounts from accredited investors, and be able to advertise. The best of absolutely all worlds. So to give you a real live example, if you're buying a piece of real estate and you've got to raise $10 million, $15 million in equity, happens very regularly nowadays. Now, we all know that it's been a real estate bull market for the last decade plus. Now, the accredited investors, they've been investing less more recently. And it's because the real estate markets have gotten a little bit more rocky. But those are the accredited, the high net worth investors. Everybody else, the other 90% of America, has not had the opportunity to participate in these types of real estate investments. But now, being able to run the Regulation CF, accept everybody as an investor, side by side with the Regulation D, Rule 506C, you can raise your $10 million. You can go beyond the $5 million cap from Reg CF. You can now accept the non-accredited investors, which is a limitation on Reg D 506C. All of a sudden, you can do a lot more without the other alternative, which is Regulation A, which allows you to raise $75 million from everybody. But there's a lengthy, cumbersome, expensive qualification process that you have to do with the SEC. Instead of it taking 6 months, now you can crowdfund for as much as you ever needed and get your deal on the table and capitalizing in, give or take, about a month. So if you want to take those next steps, feel free to reach out. If you want to learn more, check out our more educational information and videos on our channel. But at the end of the day, we really want to work with you, not just now, but for the rest of your career. Thank you.